What's going on, guys? Hope you're having an absolutely fantastic day. So in this video, we're going to be listening to Cathie Wood talk about a sector that she thinks will 30x. So let's just roll the clip and then I'll give some of my thoughts and opinions after.
The profitability associated with disruptive innovation. Now, many of you know that the pundits out there, whether they're in the media or in our own business, have characterized what ARC does as profitless tech and concept capital or tech wreck, and have equated what we're doing to what happened during the tech and telecom
I'm just
bubble
going to
and
speed
the
this up.
bust. In fact, our strategies have behaved worse than during the bust, even though so many companies went bankrupt. So many companies that should not have existed back then went bankrupt in the NASDAQ. They had gotten into the NASDAQ and they went bankrupt. And yet the price decline in the NASDAQ back then.
Okay, so this is a very interesting thing that she's saying, right? She's saying basically her performance has been even worse than the tech bubble bust, right? So I'm not sure whether she's trying to say it's a good or bad thing because obviously it's a bad thing, right? But what she's essentially saying is maybe the market is wrong and she's right and it's overcorrected, right? Because even though the NASDAQ has went bankrupt, a lot of companies in the NASDAQ in the 2000s went bankrupt. Her performance is still worse than even after the all those companies went bankrupt, right? If she compares her performance. And don't forget that a lot of her companies are just money losers, right? They haven't went bankrupt, nothing like that, right? So can you imagine if it actually goes bankrupt, how bad her performance will be? So you guys can make that decision on your own.
Then was not as severe as our own price declines, at least for some of our portfolios. It makes no sense because the seeds for what is happening today in innovation were all planted during the 20 years that ended in the tech and telecom bubble and then the bust. There was too much capital chasing too few opportunities too soon, and that's why there were so many bankruptcies. Now we do not believe that's the case. We are ready for prime time, and you can take a look at our research for many examples of.
Okay, so basically what she's saying is in the past 20 years, the time has passed that we needed all this tech, right? And basically she's saying that this time there's not as much capital as there was in the 2000 bubble. So at this point, I definitely disagree with her because you can see during 2020 and 2021, the VC investments were crazy, right? I remember like Tiger Global was signing like 2 deals every day, right? That's just insane, right?
That. And so what we encourage our companies to do, now that we are ready for prime time, is to invest aggressively right now to capitalize on some of the most important investment opportunities of our lifetime, of the last, really ever. We believe that the market cap associated with truly disruptive innovation, transformative innovation, will go from 7 trillion now, less than 10% of the global equity market cap, to 210 trillion in the next 8 to 10 years. That's a 30-fold increase.
You guys just heard it, from 7 trillion to 210 trillion. And I'm not so sure where she's getting these figures from, so let's continue listening.
That's exponential growth. And I think that a reason a lot of people have trouble with our strategy is we've grown up in a world of linear growth. And the last time many investors heard the phrase exponential growth was in the tech and telecom bubble. And there's a lot of muscle memory associated with that. Many of those managers became value managers. I know, and I hear them denigrate our strategy, perhaps because of their experience. We've been doing the real research on disruptive innovation. And according to Wright's Law, and according to all the learning curves, cost declines, and so forth, we are ready for prime time in the 5 areas around which we have centered our research and investing. Multiomics, so what we used to call the genomic revolution, robotics, energy storage, artificial intelligence, and blockchain technology. The technologies are ready. We didn't even get the cloud until 2006. We didn't have the big breakthrough in deep learning until 2012. We didn't get the cost of DNA sequencing down to $500 per whole human genome until this year. So, but we're ready for prime time now. So we've just finished one holiday. And we're going into another series of.
Okay, so before she gets to the next point, right? She does have a good point that all this tech is like really needed nowadays, right? But now the question is, when it comes to investing, right? It doesn't matter if you can cure cancer, right? But if you can't charge a good price for it, or if you pay, let's say, 10 trillion for a company that can cure cancer, and they can only make, I don't know, 100 billion a year, right? It's still a bad investment, right? Because it's a PE of what, 100? or I think it's 1,000. So I'm presuming they can't grow, right? So 1,000 PE for something that can't grow is way too much, right? And this is the problem I see with Cathie Wood, right? She's so focused on the disruptive innovation that she doesn't realize, the more disruptive your technology is, the more people will be going after that market, which leads to it being very competitive, which leads to it being very profitless for the companies involved, right? And I think that is really blinding her, so that's just my opinion. So if you're enjoying the video so far, do help me smash up the like button, hit subscribe, and also hit the bell button and press on all, right? So this will really help out the channel, and also watch till the end, right? Because obviously you don't want to miss any important information.
Holidays during the next few months. So of course, we wish you a wonderful holiday season, but just let me leave you with one thought and hope. This is the hope. And based on our research, I think this is really possible. So if you look back to the last time we had multiple innovation platforms evolving at the same time, telephone, electricity, and the automobile in the early 1900s, what you found is we were at a period very similar to where we have been very recently. There was a pandemic, the Spanish flu. There was a war, World War I. Now, both of those were much more serious than what we've experienced this go around. We are an echo of that. Inflation hit 24% in June of 2020. And by June of 2021, it was down to minus 15%. And now, as Jeremy Siegel reminded me, we were on the gold standard then. So they needed to try and get prices back to where they were before the pandemic and war. But the echo here is money growth is falling, just like it was then. So we believe that the drama there, that 24% to minus 15% in inflation from 20 to 21, that we will see something akin to that, an echo of that this time around. So we got to 8, depending on the measure, 8 to 10% inflation here in the United States. Europe's at 10% right now. And we would not be surprised and agree with Jeremy Siegel that we could slice through 2% at some point next year. Commodity prices are already pointing in that direction. Massive discounts over Christmas because of overwhelming inventories are pointing in that direction. And so I'll just say one last thing. When we first moved to St. Petersburg, it was about a year ago. And I remember walking out around the park to go take a walk. And I ran into a woman named Cheryl. I think her name was Cheryl. Could have been Shirley. She was on her bike. She had a little dog. And she recognized me and ARC, knew all about ARC, read our research. And I think, and she pulled up her app with, our portfolios. And again, about a year ago, and this is as tough a year as I've ever had. This is worse than 0809 by far. And I think of her every day, and I think of all of our clients every day. And I know that patience will win out. And I'm not sure if Cheryl is still in our funds, but know that I take these things very seriously. But I also know that we cannot pivot from our style. Style drift in our business is suicide, and our focus is exclusively on disruptive innovation. We would not hedge with energy stocks. The energy index is at an all-time high, despite oil prices falling from 130 to 80. That makes no sense. But we're seeing a lot of people drift, even if they have ESG mandates. So we will not drift. And we know that our research is pointing us in the right direction. If anything, in the last year, our conviction in our research has increased because the artificial intelligence breakthroughs that we were expecting 5 years from now, maybe even 10 years from now, are happening now. GPT-3 chat, or chat GPT-3, it's mind-blowing. So I think truth will win out, patience will win. And we're looking forward to more in the know videos, sharing our insights and thoughts in the new year. And by which time, at some point, we expect the pivot to have taken place. So with that, have wonderful holidays, and I will look forward to doing more of these in the knows in the new year.
Okay, so I just want to talk about what she talked about a little, right? So I don't agree that inflation is just going to go down magically because all the commodity prices are going down. That is true, right? But when these things move in cycles, right? So when it goes down, right, I don't believe it will be a straight line down to negative, right? So I do believe there will be a second inflation hump, and then that will lead maybe the Fed to over tighten or something like that, right? But short of anything disastrous, I think the inflation print is not going to go negative anytime soon, right? And what I mean by anything disastrous is like if there's a giant recession, or if there's a depression, or something that slows consumer spending, right? So it doesn't matter what it is, right? But one thing I do have to credit to Cathie Wood is her resilience, right? Because even though after all this, it's negative 75%, I think this is in, let's say, 1 year, just about 1 year. So, about 2 years, right? So from the peak, it's down 75%, right? and she's still very convicted in her strategy, right? Maybe she knows something and the rest of us are wrong, or maybe she's wrong but she can't say it because she's running a fund and all of that. And to me, at these prices, yes, a lot of her companies are looking at bargain basement prices, right? But I do believe a lot of the companies in the ETF, I wouldn't be touching either, right? For an example, look at Coinbase, right? Coinbase is a stock that I wouldn't touch at the moment, right? Because they have about 500 million in stock-based compensation a quarter, right? And the whole company is only worth 10 billion. So if you're looking at that, if you project it linearly, that's 2 billion, and the company is 10 billion. So you are getting diluted at a clip of 20% a year, right? So that's pretty insane, right? And until that slows down, I'm not touching it at all, right? But I do believe what part of what she's saying is correct, that all these are growth stocks, all these stocks that will do very, very well over a long span of time, right? They have been absolutely crushed, right? If you look at her ETF. And the reason they were absolutely crushed is because of this run-up, right? So you can't have a huge bust without a huge boom, right? And I think this was really, really overdone, right? Because people believe that, oh, the Fed's never going to raise rates until 2024. Then some people might be saying that, the Fed can never raise rates after this. And when the time came and inflation is up, we saw that it's not the same situation as 2008, right? Of course, sometimes history rhymes and sometimes it doesn't, right? In this case, it didn't, right? A huge amount of money printing in 2008 caused no inflation, but you can see this time around, huge amount of money printing combined with supply chain lockdowns, then the inflation was very, very insane, right? So yeah, that's about all I wanted to share today. If you did enjoy the video, do help me smash up the like button, hit subscribe, and also hit the bell button beside it, right? So and comment below, right? Are you buying Cathie Wood's ARK ETF? And also are you buying any of her stocks, right? Because I am interested in some of the stocks that she's picked out, but maybe the pricing is not right. But I wouldn't buy her whole ETF, right? So that is just my personal opinion, right? Because there is just too many companies that I see red flags with. With that being said, have a fantastic day ahead and peace out.